My name is Simon Jennings, and I'm the head of ESG at Apereo Intelligence. For those who are less familiar with Apereo, we are an independent corporate intelligence and risk advisory firm with offices in London, Paris, and Bucharest and Cluj in Romania. We operate globally and offer services in due diligence, corporate investigations, ESG consultancy, and strategic intelligence. Our staff are drawn from a range of professional backgrounds, and we speak over 20 languages in-house. Our dedicated ESG division provides sustainability and supply chain due diligence, as well as broader ESG advisory services to both the financial and corporate sectors. The focus of today's webinar is the growing regulatory environment and sustainability standards that govern the critical materials industry and its supply chains. As the world's largest economies transition to a greener future, investors and stakeholders throughout the value chain are facing increased pressure to adopt higher standards of sustainability and ensure the traceability of materials they bring to market. Many of these materials are considered crucial to developing the renewable technologies like wind turbines and electric vehicles that will support the energy transition and help meet our net zero emissions goals. But actors across the sector are faced with some of the starkest sustainability challenges, including weak governance environments, high levels of emissions, and human rights issues such as child labour. We're lucky to have with us today a diverse panel of speakers from law and policy, industry, and the investment spheres to discuss various initiatives and pressures aimed at establishing responsible supply chains across the sector. First of all, I'm very pleased to welcome Ludovine Wouters, Managing Partner of Latitude 5, an investment and advisory firm that supports investors in mining, real estate, infrastructure, and private equity across Africa. Ludovine is a governance and policy consultant with expertise in strategy, transaction management, regulatory, government relations, and permitting. She also has significant legal experience with leading international firms in Paris covering corporate law, mergers and acquisitions, and capital markets. I'm also delighted to introduce Roberto Garcia Martinez, the CEO of Eurobattery Minerals. Eurobattery Minerals is listed on the Swedish Stock Exchange and the German Bourse and is developing projects exclusively in Europe with a particular focus on nickel, cobalt, copper, and rare earth elements. Roberto has more than 25 years experience in the mining industry and has worked on both theoretical and practical sides of exploration and mining production. Over the last 15 years, he's been president and CEO of several major mining groups in Africa. And finally, we're very fortunate to be joined by George Dunn, Senior Investment Professional at Greenstone Resources, a private equity fund specializing in mining and metal sector. George has recently gained the CFA certificate in ESG investing and was formerly with JP Morgan's metals and mining investment banking team in London and Johannesburg. From there, he moved into industry, assuming senior management roles at a number of private and public natural resources companies across Africa, Latin America, and the former Soviet Union. Before I hand over to our panel, we of course welcome questions from our audience on any of the points raised during the discussion this afternoon. I encourage you to submit these any time through the Q&A function, and our panelists will be able to address them in the second half of the webinar. So with those introductions and housekeeping taken care of, I'll now hand over to Ludovine Wouters, who's going to give us an overview of the sustainability landscape around critical materials and how it's currently evolving. Over to you, Ludovine.
Thanks, Simon. I'm delighted to participate in this important and topical discussion. Let me just put up a few slides, which I hope will help in getting some of these key points across. So what I was really hoping to do today is to set the scene and the context for the following discussion. And I guess I'll start by jumping right in to the background to much of the discussion on critical raw materials for the last few months, which has been really brought back to the fore by the announcements around the Raw Materials Initiative by the EU in September 2020. So the first thing is, I think it's important to remember that the the Raw Materials Initiative has actually been in place within the EU since 2008 with the aim of securing reliable and unhindered access to raw materials used by European industry. The focus of the initiative is on all materials with the exclusion of agricultural production as well as materials used for fuel. So those are important exclusions. I think it's important to understand the rationale behind this initiative because it's driven a lot of the policy to date. And the rationale has been geared both towards the economic and industrial positioning of the European bloc, but also social considerations. There's always at the core of this action a willingness to protect and develop the 30+ million jobs that are dependent on the availability of raw materials across the Union. The other element that's important to understand is that the rationale behind the Raw Materials Initiative by the EU evolved with the adoption of the SDGs and the EU commitment to the SDGs in 2016, when the EU pledged to apply the principles of sustainable development to all EU policies and initiatives. So at the heart of the Raw Materials Initiative is, of course, the notion of critical raw materials. A first list of critical materials was published in 2011. It's updated every 3 years. And actually, the methodology for the selection of critical raw materials was updated in 2017. It hinges on a combination of economic importance as well as supply risk, which of course can be mitigated to some extent by substitution and recycling options. What's interesting is that the criteria for the definition of critical raw materials is fairly similar in the US. So I would reference the executive order of December 2017, which caused quite a bit of discussion at the time, which has a very similar type of criteria around economic importance and supply risk, but adds an additional emphasis on national security. And interestingly, the Department of the Interior, when it adopted a list of critical raw materials, I think there's 35 materials on that list in 2018 on the basis of the executive order of December 2017, there's significant overlap with the European list. So we can definitely see an alignment both of the stakes and of the approach there. The fourth list of critical raw materials adopted by the EU in September 2020 comprises 30 materials. Most of these were already identified in 2017 as being critical, and there's notable additions to the list in 2020 like bauxite, lithium, and titanium. I should stress that the critical raw materials list is actually the result of an extremely detailed criticality assessment based on these criteria, which covered 83 materials. And although there is a list of 30 critical materials, there is also a secondary list of materials, including things like helium or nickel, which are not deemed critical because they either don't meet the economic importance or the supply risk criteria, but are very much on the radar of the Commission in view of their relevance for a range of emerging applications. So the goal is to have a very dynamic approach. So this map, which was widely circulated in the last quarter, is the map of the supply concentration of critical raw materials into the EU. Of course, it's not surprising. It shows a high degree of concentration, but what's more worrying from an EU perspective, which is slightly different from the US, is that in many cases, there are low substitution or recycling rates which could mitigate, and in this case, actually compound the risk for European industry. Again, unsurprisingly, China is high as a concern because it's the largest supplier of several of the critical raw materials for the EU, but it's not the only one. And there's a variety of global relationships at stake here. So for example, Russia and South Africa being global suppliers of platinum group metals are also very high on the list of critical relationships in relation to raw materials for the EU. And even between the EU and the US or Brazil, for example, these relationships are also at stake because the US and Brazil are primary producers and suppliers of specialty metals into European industry. So it's a complex web of relationships. I think what's important to understand is also what's at stake, why this is important. And in 2020, the EU went a step further than it previously had in that the critical raw materials thought process was completed by a foresight study, which projected this demand into a very long horizon because it targets 2030 and 2050. So aligning with other key European timetables around the green energy transition and the industrial strategy. And focusing on three key sectors. Of course, we talk about renewables and e-mobility as being strategic in the context of the green energy transition and a carbon neutral economy in Europe by 2050. But the fact is defense and aerospace are actually strategic to the European economy and as such rank very high in the EU's assessment of key technologies and the materials that go into these technologies. The reason I mentioned this foresight study is, first of all, because it really takes a very long-term view at these issues. But the other reason is that it draws some conclusions which are ancillary to the raw materials agenda, but very much feed into the same idea of identifying priorities. And these conclusions concern the need for increasing manufacturing opportunities in Europe, significant need for R&D investment at all levels of the value chain for these technologies and in these sectors, including materials processing, and of course, skills development to enable all of this. This is quite key because the other countries, whether it's the US or Japan, are taking fairly similar assessments on the long, in the long term as to same technologies. So we're in a situation where there's a competition between countries or regions, but there's also a competition between sectors and sometimes even between technologies for access to the raw materials and or the skills enabling progress. So in this whole context, how can we define the European response and how does it sort of match other responses, including the US? So I know this slide looks like my PowerPoint sneezed, but it's actually a fair depiction of how the European approach is now seeking to integrate a variety of complex initiatives with overarching principles and objectives. The Raw Materials Initiative at the heart of this took a real leap in 2020. It aligned more than ever with the European Green Deal. It's completely aligned with the EU industrial strategy. The foresight study was an element of this. And in both cases, this is due to a clear acknowledgement of the fact that access to resources is strategic to the green and to the digital transformations, but also due to the fact that the EU more than ever factored in issues of security into all three of these initiatives and its assessment of its needs. I think this is in part due to a reaction to the positioning of the US in 2017, 2018. We all know that the previous administration was a complex partner to discuss with, but it's also due to the COVID crisis and the fact that worldwide, global supply chains were reassessed, particularly in terms of public safety, but also strategic sectors. So the issue of the bloc's security has been tied into these initiatives in a way it wasn't expressed before. The Critical Raw Materials Action Plan, which is at the heart of this, was announced in September 2020 with 3 overarching objectives. The first one is, of course, to reduce Europe's dependency on third countries and to diversify supply. The second one is to improve resource efficiency and circularity. So it's tying into the green transition. But also the third one is to promote responsible sourcing worldwide. And I think it's important to recognize that this is not just an alignment of values and economic and strategic priorities. It's also because the EU views responsible sourcing as a priority. The goal is to establish or develop lasting relationships and or lasting industry sectors. And it's very much acknowledged within all of the EU architecture now that the sustainability and transparency of these relationships is, and of the industries that underline them, is essential even to commercial and economic and industrial success. So it is values driven, but it's also very much a recognition of a changing role of societal expectations on all of the actors of the mining and minerals value chain. We've all heard a lot about the European Raw Materials Alliance, which is, again, an offshoot of the Raw Materials Initiative and the Critical Raw Materials Action Plan. What's interesting about that is the fact that the EU is very much taking a wide approach, bringing in a large number of stakeholders, industry, research, policy drivers, to focus on its most pressing needs. And the Alliance has been specifically tasked at the moment with increasing EU resilience in the rare earth and magnet value chains. So that does give us a clear indication of how much of a priority the rare earth agenda is for the EU right now. So let me just skip to one last slide. It's excessively boring because it's a list of the critical raw materials. I'm not going to lie to you. I don't know what most of these are in detail, and sometimes not at all. But I think what's important is highlighting how rare earths position in this universe, because they illustrate some of the key issues that the EU is facing here. Let's be honest, 98% of the EU supply of rare earth elements is from China, which is of course of huge concern, considering rare earths are essential to the production of high-tech, low-carbon goods such as electric vehicles, wind turbines, batteries, energy-efficient light bulbs, but also the fact that rare earths are indispensable to the defense sector, which has been deemed more strategic than ever by the EU. So, applications including laser and night vision goggles, radar equipment, all require these elements. What's interesting is that the rare earths criticality assessment happens at 2 levels. The first one is really the level of mixed rare earth oxides, which roughly corresponds to mine productions or the very first stages of processing and separation. There's a second bottleneck, however, which is at the level of high purity single rare earth elements in the forms of metals or alloys, which is really the result of advanced separation and refining. The complexity here is that China has a huge share at both levels. And although its share of rare earth mine production has fallen slightly in the last few years because you've had new emerging production in Australia, in some Central African countries, for example, very much the Chinese monopoly and domination in the downstream value addition capacity has not only been maintained, but in large part even, continuously expanded. So the risk here is not so much creating new production capacity, it's recapturing or creating alternative lines of processing. And again, this ties into the long-term outlook, both for the EU and the US, of reinvigorating research and development around that processing capacity. It's frankly unclear to me whether the change of administration is going to significantly change those dynamics. The fact is, even if the new Biden administration is possibly a less challenging discussion partner for Europeans and other industrial nations or regions that need access to these resources, the US has always taken a very America first approach to these issues. So, you know, at the moment, it's unclear whether that's going to continue to be the case, or whether there will be perhaps more opportunities for global cooperation to reduce China's domination. So that was a little bit of where we are on the global setting, and I'll leave it over to my colleagues now. Thank you very much.
Thanks very much, Ludovine. That was a fascinating insight into the current state of play within the industry. So just in your view there, how effective are these sustainability measures likely to be in really helping to drive forward more responsible supply chains through the industry?
I think the fact is that the value of the sustainability or the ESG parameters, depending on how you're looking at it, is really going to be determined by effectiveness of impact rather than cosmetics. And there still is a lot of hype, which sometimes results in more cosmetic action than actual impact. So I think it's still to be determined. What is important to note is that the generalization of these frameworks, not just in terms of regulatory impact, but also industry driven. The fact that more and more key points of passage in the value chain will increase their requirements. For example, the LME is now implementing the OECD due diligence framework, exactly as the EU has just started to do it on conflict minerals. The LME is now implementing that across all the LME traded minerals. So I think the fact that you're going to have less and less space for materials trading which happen outside of these controlled and transparent value chains is going to probably be the most effective factor of change, rather than a lot of discussion or even global regulation. I think it comes down to people being able to sell their materials first and foremost.
Okay, that's great. Thank you very much, Ludovine, for those really interesting insights. I'm going to turn now to Roberto Garcia Martinez from Eurobattery Minerals. Roberto, Eurobattery Minerals is focused on developing sources of these critical materials and rare earths. What does this sustainability landscape that Ludovine's outlined mean for you, and what are some of the impacts it's having on the industry?
Well, good afternoon, Simon. Thanks, Ludovine, for the great presentation. I have learned a lot about regulations right now. For me, the first thing that we need to understand when we are talking about sustainability is that people in general, public people, not specialized in mining things and sustainable, is just environmental issues. And we need to educate people in general. Sustainability for me has three key points: economic, environmental, and also social. And as a miner, as a company, we have just to define that very clear. Then sustainability is not only environmental issues, so has a big component of economic and social impact. Saying that, all these regulations that Ludovine just mentioned right now obviously has changed mining, the history. I have been for many years working on mining in Africa, and obviously mining in Africa is quite different than mining in Europe, where regulations are much more strict. And luckily for all of us, these regulations make mining more sustainable in the European continent. So yes, Simon, everything that has to be with regulation help the mining industry maybe to be more compliant with all we want to do.
Okay, thanks very much, Roberto. And just, I wondered if you could just speak to Eurobattery Minerals in particular. So, as a future producer of critical materials solely in Europe, some would argue that sustainability regulation presents a significant barrier to certain new projects and delays to production. Some of the red tape or public resistance that we see around projects, moving ahead quickly. Given the real rising demand for critical materials and rare earths in the current environment, could you give us a sense of how you overcome this, and how realistic is it to really focus so heavily on mining within Europe?
Absolutely, Simon. Let's begin from the big topic. The key driver from the consumers at the moment is full transparency. They want to know where the minerals are coming. Everyone, just to make this topic or this conversation more casual, everyone that buys today a car, an electrical car, wants to know where these batteries are made, where it's coming from. It happens in other commodities like gold or diamonds, where I have been working for many years. So when someone buys today a car, an electrical car, is demanding full transparency. And I have to say that here in Germany, where I'm based, the two major car manufacturers, BMW and Daimler, just a couple of months ago announced that they will not buy minerals that are not certified from big organizations. So saying that, the mining is just changed a lot of. For example, BMW just make shortly last year an agreement straight away with or directly with mining industries in Australia to supply them with ethical, full traceable and full sustainable minerals for the batteries that are made here in Germany. So that is a new wave that is changed mining industry worldwide. Saying that, obviously, as Ludwig mentioned, the EU Green Deal it will happen with e-mobility, with clear words. Is we like or that we don't like combustions and fuel motors, they will go gone. They will disappear in 10, 15, 20 years. And that will be changed to electrical battery and electrical vehicles. That is the fact. We will not stop that. And luckily for all of us, it will happen. But obviously, that means that Europe needs to be mined more. As in the map that Ludwig just mentioned it or show us, that is a very good example, because when I make presentations to investors or just participation that I'm doing, people are very surprised when I told them that many of these minerals can be mined in Europe. The European continent is very rich in all these minerals. Yes, as Ludwig said, some of them are monopolized by China or the Congo or other countries, but Europe needs to mine more, can mine more, and if we want to be neutral emission by 2050, we need to do that in the continent. Saying that, Eurobattery Minerals in our project that we have in Sweden, in Finland, and in Spain, we think that we will be an added value for that. Our operations, we will fulfill all the sustainability criteria that the European regulation and the European bodies are required. So by saying that is using clean energy or wind energy or the water energy or water produced energy. For example, our project in Spain is very close to a wind plant park that is very close to us. So we are talking to them to supply our with clean energy. another topic, for example, in sustainability is to don't deforest the environmental, maximize the water resources. All these things are easy in somehow to do in Europe, because Europe is quite well organized from the regulation point of view. And as I mentioned it before, when you go to another countries, or you go to Africa or to Asia or to South America, it's not always happen the same. So when the people heard that we want to do, or some mining company want to extract lithium in Europe, people begin just to be scared, because they know that lithium in South America needs a lot of water and a lot of water resources, but that is not always like that. We cannot put all mining industries in the same bucket. The European mining industry is not working and is not acting as the other ones. So that's we have to differentiate. And we believe in Eurobattery Minerals, with our experience and our projects in Europe, we can be an added value supplier for the European market with minerals, full traceable, full ethical, and full sustainable, coming from the European market, from the European continent. And just by the fact, as Ludovic mentioned it, that one of the biggest problems that the European mining industry has is that many of these minerals are outside to Europe, but also inside to Europe. But one handicap that the European mining industry has is that refineries are based outside to Europe, principal in China, in the US, and always when I'm talking to people and not government, because I don't have access to them, but maybe one day we listen to the small European the Eurobattery Minerals CEO, I will always say to them, it is not only the mining industry that need to be expanded in Europe, also the capacity to refine these minerals. Because as an example for you and for this public and these participants today, just a normal example is these e-rollers that are driving in all European cities, Madrid, London, Paris, wherever, Copenhagen, Stockholm. The majority of all these e-rollers are making in China. Why? Because China, as Ludovic mentioned it, is where these refineries, where these production chains are based. So what happened is, for example, in Chile, they extract the lithium, which is necessary for these batteries. They shipping to China, where already the emission of CO2 is immersed. They arrive lithium to China. They manufacture this lithium with all the other components coming from Congo, that coming from other regions that maybe they are not very democratic, let's say it in that way, not very political correct democratic countries. So they assemble all the parts, they do the batteries, and they do the bodies of the e-rollers, and they shipping again these e-rollers to the European countries. And they start to roll, to drive in the European cities. With many cases, I don't need to mention it. But the people that doesn't know that, one, the majority of these batteries components are coming from Congo, which is, as I mentioned it, not very compliant with work labor laws. And secondly, is the average of roller in the European countries or in the European cities is 23 days. And after 23 days, normally an e-roller is broken, is not used anymore. So all this chain just for 23 days. So I said all the time, to avoid that, Europe needs to mine more. Europe needs also to invest more money in refineries and processing plants. And when we can do that, I believe that in 2015, this wonderful continent can be emission neutral and can be the power of this electrical revolution that will not happen in 2015, is happening right now. And I believe that we have to start from the beginning of the chain and to start to look around what is sustainable and what not is sustainable. By saying that, I have to mention it that Robert Friedland, who is, and probably my colleague George knows better than me who is a huge, large mining investor, just mentioned it last week in an article that it will be not a price for a commodity. It will be not a price for gold. It will be not a price for nickel or a copper or a cobalt. It will be an individual price for every single piece of gold or a copper when it's complying, and everyone will be priced complying with the ESG components that minerals. And that is a great value from the mining industry when that will happen, because we believe that European mining companies can be an added value for that, definitely.
Excellent, thank you very much, Roberto. That's fascinating. No, that seems like a very good point to bring in George. George Dunn from Greenstone Resources. Yeah, given your experience across the sector and particularly in investment banking and on the private equity side, I wonder to what extent Roberto's comments chime with your experiences in the industry, and how are growing sustainability requirements and the pressures here in the supply chain really impacting investors?
Yeah, thanks, Simon, and good afternoon, everyone. Yes, I mean, it was interesting listening to Roberto talk in particular, and the emphasis at the moment in terms of mining companies and the pressure that's coming on them from consumers in particular. I think behind that and aligned with that, there is a lot of pressure coming through from the investment industry, the investment management side. And, so yesterday, as a good example, Larry Fink, who's the CEO of BlackRock, the largest institutional investor in the world, came out and he called it a tectonic shift in terms of the move towards sustainability and ESG integration throughout the economies, really. And so in his letter to clients, he's essentially giving an open instruction to companies saying, if you have not rolled out your platforms for becoming carbon neutral by 2050, you will face divestment. And for a lot of kind of particular mid-junior tier mining companies, having big institutional investors on your register is one of the definite goals if you're a public company. The message is very clearly there now that these big institutions will not make exceptions. So if you do not embrace sustainability, embrace ESG, and really put it at the front of your platform, you will not get investment. So it's something that the mining companies, really are starting to wake up to, I think. And what it reflects is very much a change, I think, in terms of the pressure that asset owners and the pressure that regulators are putting on the financial industry in terms, of trying to encompass sustainability within their stewardship duties. So as an investment manager or as a general partner of a PE fund, you have an obligation to protect and enhance your client's capital. So as part of that, ESG has always been, a very strong feature of the due diligence process, for example. So when making an investment decision, particularly in a mining, for instance, in a mining company, you will look at particular parts of their ESG performance and how they're planning to tackle certain key risks. So if you're looking at potentially a copper project in the Andes, you want to know what their social engagement level is, because that is a very, very clear risk. There are multiple copper projects that have been stalled or in many instances, killed by social action. And likewise, if you're going into African jurisdictions or other emerging markets, you may look at how are they tackling political risk. So this has always been part of investment managers' role, but very much more in terms of an exclusionary due diligence decision that's taken prior to an investment. Now, this has changed fundamentally, and with initiatives, for example, the PRIs, the Principles of Responsible Investing, which a lot of the investment community is signing up, they don't just have an obligation for the investment managers to integrate ESG into their decision making. They actually are now, providing and demanding that those members disclose their activities and take on the role of active owners. So what that means now is that, for an investment manager making an investment into a mining company, it is not enough just to make sure that company has appropriate practices and is trying to integrate sustainability. There must be an ongoing monitoring process, which that manager is then going to have to report back to their clients and their investors as to how they're managing their own sustainability practice and how they're enforcing it then onto their investees. And so that that enhancement of that facility, really, of being an investment manager, now means that there's much more integration, much more engagement that's demanded between the manager and the management company of the investee. And I think that, if you're looking for examples of that being put into effect, a dramatic example obviously was the issues of the Rio Tinto resignation of their CEO last year, in the wake of the Juukan Gorge problems. That was certainly, I think, a shock to a lot of in the mining arena. But I'd also actually look at another company, SolGold, and how they're over the past 9 months or so, in the wake of pressure from certain investors, both institutional and key mining investors, they have had an ongoing program to improve their governance and actually refresh their board, try and improve their governance procedures as they look to developing their project more towards a construction stage. And early this year, it led to the resignation of their CEO, who did not have the support of some of their key shareholders. And so that is a process where a mining company under pressure has had to make dramatic changes in terms of its overall constitution and governance to meet the demands of the investor community. And I think that within the boundaries of critical metals, it's it has an added dimension in the fact that these are very opaque industries typically. So if you're an investor into a critical minerals or rare earths project, you will typically be investing at the mining stage. That's for a lot of institutions and a lot of PE, they are investing in the mining sector itself. But when, as Ludovine made very clear, there's so much power actually downstream in the processing side of the sector. How do you try and enforce sustainability change into that end of the sector? How do you diligence it accurately? It's very difficult to know when there isn't much data available. And when there's that much concentration of power, as for example China has with the rare earths industry, which is a different jurisdiction, different regulations, how can you ask a mining company to really try and tidy that end of the chain up? So there's definite challenges there that have to be taken on. And I think for looking at how to address those challenges from an investor perspective, I think that there are probably three standouts for me. First of all, there's the overall fundamental difference between having good stewardship and meeting your fiduciary duty. So fundamentally, we have a duty to our clients to protect and grow their capital. That's our fiduciary duty. We must make all our decisions based on protecting that value. But then how do you integrate stewardship across your portfolio, particularly if your portfolio consists of small, medium tier mining companies whose resources are probably already stretched? They'll very often be pre-production, so they'll be in cash burn phase. You're then asking them to adopt practices which require ongoing monitoring, ongoing disclosure. That is not a small task. So is it really worth the potential value which it generates? And at the moment, I think it's arguable to say that asking a junior public company to invest a lot in ESG disclosure, does that actually gain them any value? It's arguable whether it does. And then following on from that is that what standards do you seek for them to adopt? So it's a big issue, throughout sustainability and ESG, that there's a plethora of different standards, different regulations, and the mining industry has tried to tackle this. We have initiatives like the ICMM standards, we have the EITIs, the Extractive Industry Transparency Initiative, but they're very much built around large cap production companies, who have the resources, who have the team to dedicate towards being able to generate the amount of data and disclosure to meet those standards. They are not really fit for purpose for a small exploration company. And I was reading the other day that Ross Beatty, who's a very well-known mining investor, very successful, talking about the ESG challenge and sort of saying, his instruction to mining companies saying, look, in the absence of any standardization of ESG ratings across the industry, just disclose as much as you can. But realistically, how helpful is that to a small exploration company, who don't have a particularly large staff, and the staff that they do have will be very much focused towards trying to develop the assets that they have? And does it really help the investor community? And I think the answer is no, because over disclosure, it quickly becomes noise. So it's difficult to pick out the material issues that are relevant to those particular companies. And it's also easy then to hide potential issues that may be affecting companies more than you think, but which they would perhaps like you not to focus on. So it's definitely a big challenge across sustainability, and it's definitely a big challenge in the mining industry. And I think, echoing onto sort of what Roberto was saying, then I think there's the investor, particularly with a non-sophisticated investor, their actual expectations. So looking to align themselves with a lot of the regulations and initiatives coming out of the US and the EU and so on, they have a very, very high bar. But then how do you actually roll that out across, particularly in the critical metals sector, where you're going to have, the demand for exposure to these materials means that investors are going to have to look increasingly at smaller scale operations in emerging markets, very different jurisdictions, regulations, and mining cultures. So how do you meet the expectations of your clients with the actual practical implications of trying to get exposure to those materials? So if you take, for an example, tantalum, about 50% of the world's tantalum supply comes from small artisanal mining production out of the DRC, Rwanda, Central Africa. They have a long history of mining. It's gravity separation. With a spade and with a pan, you can go and you can actually become an artisanal miner. You can feed your family. And it's actually quite hard to mechanize that and to make it that much more effective by bringing in, say, European standards of mining. So when you have this long dated culture of mining, how you need to be sympathetic to that. You can't just wade in and say, right, you've got to stop this. Everyone's got to wear hard hats. Everyone's got to wear boots. It's not really, it's not really going to be effective. And similarly, as Roberto was saying, in Europe, for example, we very much lost that mining culture. So certain parts of the UK, Cornwall, for example, it started to reinvigorate its mining industry and has created a lot of excitement. But in other parts of the continent, mining is the last thing that they want. And so how do you manage that? If you can't invest into, say, artisanal production in more difficult jurisdictions, if you want to bring it back, if you want to onshore it again, how do you meet the social expectations or the social adversities towards mining? So I think these are a couple of the big challenges for me in terms of how investors participate in what will be an increasing drive to get access to the critical mine sector.
Thank you very much, George. That was a very interesting overview of many of the challenges that you're facing. I'm going to open up to the floor now, as we're getting a few questions in on the Q&A, and do keep those coming. So thank you very much. First of all, a question coming in regarding Portugal. So proposal of mining companies to mine for lithium in Portugal triggered a huge outcry of local communities. They're facing destruction of nature, risking pollution of land, water and air, as well as impact to their livelihood. What will it take for mining companies to embrace or at least diversify towards circular economy business models? Ludovine, perhaps I could ask you to respond to that.
Well, I'll certainly give a first view, and maybe my colleagues will have different views. I think the question is interesting because it demonstrates this current moment where we have a confluence and perhaps even, a conflict of resource nationalism on the one hand, where Europeans want to regain control of these supply chains, but at the same time, significant societal expectations in terms of environmental and social performance. And somewhere in the middle is also a bit of a misunderstanding, I think, about, which actor in the mining and minerals value chain is actually responsible for these various actions. What I mean by that is that a mining company, in order to mine in Portugal, yes, will have to demonstrate that it's applying best practices, environmental performance, that it's complying with, social concern requirements and addressing social concerns, that its governance is up to scratch. But a mining company is essentially tasked with making holes in the ground and extracting materials in the most economic and safest way. So, for example, when we start projecting onto a mining company expectations of development of a more circular economy and improving recycling and substitution options, we're almost talking to the wrong party, in my view. And that's why I think the integration of the EU initiatives is interesting, because it's trying to capture every party in the value chain and trying to reallocate the burden that they can take. So issues of circular economies, issues of increasing recycling, improving our use of resources, minimizing waste of materials in industrial processes. This is the work of industrials. Again, a mining company is not at that place in the cycle. So I think there's a lot of work to be done in terms of engaging with civil society, explaining a lot of this, but also, repositioning mining as part of a long industrial cycle. It's an industry like any other. Should it, adhere to specific constraints? Absolutely. If we are not, as a society, at least in Europe, willing to try and understand those constraints and work with them, then it's our own future we're putting at risk. So I think there's a bit of a balance to be drawn there. And I would definitely refer you to the work of the INFACT project, which is an EU-funded project. The title is horrendous. It's Innovative, Non-Invasive, and Fully Acceptable Exploration Technologies. And effectively, it's a large research project about assessing what are the barriers to mineral exploitation and processing in Europe. And perception is a huge one. So, tackling these issues and reversing perception, I think, is a big part of our jobs at all stages of the value chain, if I may say so.
Simon, can I add something very quick to this question also? Is this possible?
Yeah, please go ahead, Roberto.
Just specifically about Portugal and lithium, because that has been in the media in Europe quite extended in the last weeks and the last months. Also, I have to say that, as Ludwig just mentioned it in his presentation at the beginning, there is also a big topic, one big component when it's coming to mining in Europe, and is this geopolitical situation, and also other kind of economic background. And Portugal is a country where agriculture is playing a big role in the economy. Almost 20% of the income is agriculture country, and lithium needs a lot of quantity of land and water. And I know that it's a challenge for Portugal to mine lithium for that topic specifically, because water and agriculture is playing a big role there. Just to add that on the top of it. Okay.
Super, thank you very much, Roberto. Great, we've got a few more questions coming in. There's one here. So in the case of the EU and its demand for rare earths, how do we reconcile the European Commission's commitment to strategic autonomy and high-level ESG standards with the competitiveness of European companies that want to position themselves on the supply chain, that's dominated by Chinese state-owned companies? Perhaps, Roberto, you'd be able to respond initially to that one, and then maybe George could add on to it.
To be very honest, yes, I understand the question, but it's quite difficult to answer from the point of view as a miner. I believe that it will be probably more for regulators or for investors. But obviously, as I mentioned it before in my speech, China, unfortunately, is monopolized, as Ludovic mentioned it, more than 90% of these minerals. And to change that, Europe need to mine more, need to change their mine, as Ludovic mentioned it and George mentioned. The problem that we have here is that everyone wants to be electrical, everyone wants to be in the electrical revolution, but no one of us wants to have a mine at the back of our house. And that's need to be, we have to miners, we need to start to educate people in general. It is much better to mine in Europe in a regulated way than not to mine in unregulated way outside of Europe. That is something that miners or investors or regulators like my colleagues, we are helping to teach and to educate in general people. It is the way that to do it, and we have to say that miners and mining companies are part of our life. We cannot take mining industry outside of our life. Today, in every single mobile phone, there are 35 metals inside of that. These 35 metals inside of every single mobile phone, we can be mined in Europe. We don't need to mine that in Chile, in South America, in Asia, or in Africa. It is possible to fabricate and to make telephones with all companies coming from Europe. And that is something that the European Commission, the European Brussels need to appoint, and we hope with the European Alliance and other organizations and other other kind of acts and laws. Slowly we will do that, but it will take time, but it's the only way to be emission neutral in 2050, definitely.
Thanks very much, Roberto. That's great. Just in the interest of time, and we're pressing on for our hour, so I'll just go for one more question briefly. It's a question for Ludovine regarding a question coming in. Isn't it important for all types of company to review their business model? So fossil companies start investing in renewables, for example. Why shouldn't mining companies invest in the recycling themselves?
Of course, I'm in favor of definitely looking into the future and seeing how we position these businesses. What is also clear is that each of these aspects of transitioning the mining and metals value chain as a whole requires specific investment, specific types of risk appetite, and specific skills. And I'm just very aware that at the same time as we're asking all mining companies, as George was pointing out, from the smallest one to, the big behemoths that lead the market, at the same time as we're asking them to significantly up their game in terms of environmental compliance, social performance, adherence to best standards, I'm not sure that the optimal way is to also ask them to shift from business A to business B. Perhaps agreeing on each of us doing our part of the business in a better way, in a more sustainable way, and making sure that this translates across the value chain as product changes forms and changes owners, is probably a more immediate way to proceed. And just on the recycling, I think it's important to note that, there are hundreds of millions of euros and dollars that are currently being slated for investment in new technology to better use and or recycle, strategic metals and minerals. I'd rather those be spent on companies who know how to do this best.
Sure, thanks very much, Ludovine. And Roberto, would you like to add something?
Yes, just very, very quick, Ludovine. And the question is, why mining companies are not changing of that? And my answer will be, we are already doing that. Mining companies are already recycling process. We are implementing recycling process. For example, when it's coming to recycling, is many aspects and many steps of that. By recycling, we need to understand that recycling can be water recycling process, energy recycling process. There are many recycling activities that you can do in a mining. It's not just the end product that you can recycle, like batteries and other things, but the mining process itself can be recycling. And there are mining companies already doing that, and Eurobattery Miners will be one of that. Just simple like that.
Thank you very much, Roberto. Thank you. And no, thank you to all three of our panelists. I'm afraid our hour is now up. No, and thank you to the audience for a number of very interesting questions there as well. Unfortunately, we don't have time to answer them all, but I think it's been a very interesting discussion and three very in-depth presentations there. So thank you very much to Ludovine and Roberto and George. I'd like to just briefly take this opportunity to let you know about our next webinar in a Perio series, which will be coming up at the beginning of March, on March the 7th. And that will be hosted by our Director of Investigations, Paul Doran. The webinar will be titled Fraud and Compliance Trends in the Time of COVID. So that will be taking a look at how the pandemic has shaped the nature of fraud and internal malfeasance over the last 12 months. So be sure to try and join us then if you can. Meanwhile, thank you very much to our audience once again for joining us this afternoon. And thank you to our panelists, and enjoy the rest of your day.